Hi everyone, this is Penguin Trades and this is a review for the ES and NQ futures for October 3rd. We're going to start off here on the ES and then hop over to the NQ after. So here's the NQ. And so anyway, starting off, this is our overnight high, this is our overnight low, these are our key levels for the day. I started trading at this point right here at 8 a.m. And this is Central Time. So at this point here, this downtrend has a break. Now when a downtrend has a break, you can expect prices to attempt a new low. However, this break is itself an uptrend. And we're pushing off the overnight low. When you come off one side, which it just forms it there, you can still expect price to attempt to reach the other side. And so when we push lower here, this is a competition area between the bears and the bulls because the bulls want to make a new high. They want to get long because when they see this uptrend break, they're thinking, oh, we need to get in because the uptrend is going to attempt a new high. The bears, however, are thinking, oh, the downtrend is broken. We need to get short to make a new low. And so it's a competition area. There's going to be bulls buying up this uptrend and bears looking to make a new low for this downtrend. So you just have to stick with whatever price does. You just got to wait patiently. Now, when we push lower here, we get this first leg down. Notice it stems from this wick all the way up here. First leg down, break, second leg down. Now, if you zoom in, I just want to go over the smaller picture real quick so people understand who might be new. This downtrend right here has a break in an attempt at a new low, and that was enough for a reversal attempt. Downtrend, break, new low, and then reversal. However, this reversal is really just a break between this bigger picture leg. This whole leg, including the break to a new low, is all one leg. It's not just downtrend, break, new low. As soon as this reversal fails and starts pushing lower, it becomes one leg here. And so we have our first leg down, break, and then we start the second leg down, and notice that it has two attempts within it. So downtrend, break, first attempt lower, second attempt lower, and obviously it's made that new low. But the measured move is still in play, and on the way down, while these legs are very clear, it was still stacking up here, forming some support, which ends up actually working out for us here, because at this point right here, the downtrend already has its two attempts at a new low, which means you can look for a failure entry. Now, the measured move isn't met, however, there is clear support, so it's not as much to worry about. Now, with this uptrend here, it's just a two-legged break. So for the downtrend, you already have a break in two attempts at a new low, which means you can look for a failure. But the uptrend, however, has a two-legged break, which means that this is the start of the first attempt at a new high. So at first, what you have here is uptrend, break, and then first attempt at a new high right here. But then since price, when it starts correcting here, it wasn't able to push up into a second leg. It ends up pushing past that previous low. That's when it becomes a two-legged break, and you can look to get in on the bigger picture first leg at a new high. So I hope that's clear. I understand how it can be confusing learning to spot price action levels getting bigger in real time, especially when you're actually trading. But you just got to learn it and just really study the charts, and you will get a hang of it. So anyway, basically, this is a big picture failed second entry. From this low, we have first entry short, second entry short, failure, which is perfectly confluent with that downtrend. So that's why I like that entry right there. Room to this right here. At first I was looking at this channel like this, which it would be blocking in that case. However, the lows did not fit well at all. It's just this one swing here. And it's pretty common, when you have a large wick, it's, pretty common to start the trend or range or whatever, or measured move. I didn't mean to say range, I meant to say measured move, stemming from the bodies, because the bodies are bigger picture. Notice that these lows, they don't perfectly fit here, but they are moving along at this angle, the same angle of this trend right here. You know what I'm saying? And so same thing here, like this measured move, more than likely, is like this. So it's met right there. It's met to the tick when you draw it off the bodies. So sometimes you just got to see how price reacts to both levels. In this case here, like when I was trading, I'm so used to it, like I didn't even care I just did this. I could see that this measured move was still in play. However, the big portion of this first leg is all wick, and so to me it just looked like it was met. You see what I'm saying? So you just got to see how price reacts. Now, if price doesn't have a reaction off of that level from the bodies, then or from the wick, then you just got to wait and see if price reacts on the larger measured move. But because you got to wait for confirmation anyway. And so I understand how that can be confusing too, but you just, let me just explain. So, It's oftentimes it'll stem from the bodies, but if it pushes through that level, then look to see how it reacts off the wick, because if you get a good reaction, then it's valid either way. Do you see what I'm saying? So anyway, we push on up here, enough room to that channel right there, it pushes on through anyway, and now we have these two major legs up. So what we have here is a big picture failed second entry, which pushes us into this big two-legged move up, trying to reach the overnight high. It barely misses it. The measured move is perfectly on the overnight high. But as you can see, price does not quite reach it. It ends up just reversing before, basically as if it did reach it. It just plummets on down. First leg down, second leg down. Notice that these two legs up pushed into these two legs down. And right at this measured move here, price attempted to reverse, but it was unable to get very far. Couldn't even reach the EMA. It barely missed it there. And then we got another push down, and then we get another push up. So it looks like it could just be firing off. It just needed one more swing. And so it's pushing up here, but it very quickly fails again. So when we push up here, this is a good place for a reversal pattern, a failed second entry, holding above the EMA, looking to go long. And, it's perfect because it's right at this measured move. Great reaction. However, very suddenly, it plummets on down. At first, it holds off the EMA barely, and then it just takes off down. Now, we make a new low again. We still are able to get a failed second entry and look to go long. If we push up here, we do have to consider we're going into a range. At first I had the range lows a little bit higher because of those bodies right there. But clearly we're going into a range. The EMA is straight up sideways, going, looks like a bunch of hills. That's how you know you're in a range. And from this new low here, we push up. We don't get a clear reversal pattern. We just push straight up to the highs, have a good reaction, and push straight back down to the lows. So this range is really holding here. Now when we push out these lows again, we get another pierce. So we have these two pierces here. So when we push up, we can look to extend it a bit. Very clearly, strong double bottom, great reaction, pushing back into the range here. Very bullish bar, and then this forms a failed second entry. It's a little bit choppy, as you can see. It is pretty sideways, but you can still see the legs clearly. After we push up, we get two legs down, first entry short, second entry short, failure. Great context for a reversal pattern. Again, a lot of resistance in this area. Could have to do with this sharp push up starting right here, and then that measured move being in that same area. Price just could not get past this level. But either way, we have clear support right here. We're fading back into a range with a good reaction off of a perfect double bottom. Great context for a reversal pattern, so I didn't care that it wasn't, the setup itself wasn't absolutely perfect. It was kind of sideways there. But we had room to the measured move. We push on up here. Price pushes through. At this measured move, it attempts to reverse, but then quickly continues up with this trend here. And then we push out the highs of this range right here. Now, when we push out the highs of the range, we're likely to get a fade back in. And at first, we're within this uptrend. What could happen is you fade back in from here, get a couple legs up, which play out the uptrend. But in this case here, as you can see, that doesn't happen. We just go sideways for a bit. If we push out and get two clear legs down, retesting the high of this channel and also off of the key entry point, we can look to go long and look to break out here, because you can buy a breakout after two attempts to fade. You don't want to just buy it when you see this bullish bar pushing out the high. You want to wait for two attempts to fade. That way you can get in on the fade failure and continue with this uptrend. But as you can see, price ends up just pushing straight on through. And so when this happens, you have to switch gears. You're no longer wanting to buy the breakout. Now you're wanting to get in on the fade. We're already fading back down. You just want to see two legs up, holding off these lows, making a clear reversal pattern. This is what I would want to see right here, but obviously that did not happen for us. So this is what I'd like to see. Break out of these highs, push back in with a reversal pattern, failed second entry, and look to get in on the second leg down. And so anyway, it ends up just going straight down, one leg all the way through this whole range here. We broke out the lows. We get this retest here, which is a break. So downtrend, break, new low. At this point here, the downtrend is considered played out. So let me just draw this up here. We have downtrend, we have a break, and we have a push to a new low. It's considered played out. Good reaction to the overnight low. Price is pushing on up. Very expected. These overnight levels, they're not insignificant. You need to draw them. Very oftentimes, look how often this happens. Like, this is noon. It hasn't touched the overnight level all day. The whole day went by. I usually stop around this time, and we're still getting a perfect reaction to it. Okay, so you got to draw your key levels, your overnight high, your overnight low. These are major levels here. So anyway, great place for a reversal pattern. Nice push up, a couple legs back. This is what I would like to see. Something like this. Pushing back in, again, like I said, once you get a couple pierces, you can look to extend this right here. So hopefully we can get something. Notice that we're actually struggling to get through that level here. And this is one thing, I remember when I was, like a long time ago when I was still scalping, I had a breakthrough on ranges, and one thing I had a habit of was I wouldn't extend the lows after price would pierce through. So like, say this is how the range was, right? Set it up like this, you got your highs there, lows there, and say price pierces through, and again, I would leave the range where it was. That was my bad habit. And so once I realized, okay, after you get 2 pierces through, extend the range, that really changed ranges for me. And then notice here, you're getting that perfect retest there. So, that's just how ranges are. I'd like to see this reversal pattern, like I said, pushing back in, holding on, the low, or holding on this range low here for a long. So anyway, that's going to do it for the ES. I'm going to hop over to the NQ now. Now on the NQ, unfortunately, you don't see anything marked up, which, every now and then that happens. Lately, the NQ has been getting more trades, other than this week. It seems like, last couple months trading the NQ seemed like there was a lot more activity than the ES, but last week that hasn't really been the case. So anyway, overnight high, overnight low, key levels for the day, same exact thing as the other chart. I started trading at 8, right around here. Now, again, we start off with the same kind of thing. We have a downtrend and an uptrend. This uptrend is the break from the downtrend, but we also have to consider the bulls looking to make a new high for the uptrend. So I would like to see 2 pushes down, just like on the ES what we got. We got 2 legs down here, which acted like the 2-legged break for the uptrend, and also acted like the 2 attempts at a new low for the downtrend. In this case here, we just get 1 leg down, meaning this downtrend is still in play. All you have is downtrend, break, and then 1 attempt at a new low, and then a sudden reversal. So no way to get in on a long there. We continue higher here, we start going sideways, we get this little breakout. It's just a first entry. It is a breakout of this little range here, but there's not any room to the highs, or there is some room, but clearly not enough, especially given it's a first entry long. Anyway, so I didn't like that there. We continue higher. We start to go sideways again. We have first entry long, second entry long, but again, completely sideways, no good signal bar. It really does not look good there at all. We continue on higher here, and as soon as we reach that measured move, we get some reaction, but it does push on through pretty quickly. Another reaction to the overnight high before continuing on through. And again, when you break out of an overnight level or a range level, you want to wait for 2 attempts to fade before buying the breakout. As you can see, after this breakout, we only get 1 attempt to fade. So just because you have a bullish bar that pushes back above and holds, doesn't mean you want to take it. It's also far from the EMA anyway. We continue on higher here. We start to go a bit sideways, and then we suddenly get a sharp fade back in. Now, when we fade back in here, this is a great opportunity for a reversal pattern. And I know what this, there's definitely going to be a lot of people who took this here, which I fully understand why, because, it is a failed second entry, first entry long, second entry long, failure. It is a sharp fade with, with 2 clear legs back. However, there is a couple things you need to consider here. Now, when a trade has perfect context, I usually don't care if there's an STT line blocking. STT means short-term trend line, like this one here. Usually I don't care about that if the trade has perfect context. However, there's another factor involved here, which is that these 2 legs up are very thin. They're very, very thin. It almost looks like 1 leg up. There is a pretty clear separation. You got those couple bars there, but there is a difference between, like, I'm going to draw another example here. So similarly sized fade. There is a difference between getting 2 sharp legs up, like very sharp, that both legs combined is still a very sharp move up, and then a bigger separation between the legs. This is what you'd want to see ideally. Now, I'm not saying in every situation you can't take one that is as thin as that, because it is still clearly a failed second entry. I just wouldn't want to mix that with entering right into the STT. And another thing to consider is, with this previous measured move level, price pushed on through, and it is closing back below barely right there, but just barely. And so it almost could be holding above. And I just don't want to combine that with the STT and the fact that it's a very thin two-legged move up. Now, if we had gotten something more like this, two clear separated legs, possibly two-legged correction between them instead of just one right here, we'd have more separation. Then I wouldn't care about the STT here. But when there's other factors, you have to consider it. And I know it does end up pushing on through, but this doji bar did hold right on that trend line right there before pushing on lower. So it didn't set up perfectly ideal. To me, this is just a limit order trade. Now, I didn't take the limit order trade because we didn't get a good bar that closed out like afterward. So like, here this one's closing right in the middle. If this had closed on its low, ticked lower, then I would absolutely have tried to enter with a limit order. Looks like I would not have been able to get filled anyway, but it just didn't quite set up good enough. And so anyway, by the time it's closing good down here, it's already taken off too far. It's pushing on lower here. We go on down. As soon as this measured move is met, price attempts to reverse. We make this double bottom right here. And so this is a good place to get a reversal pattern, because if we get a clear reaction to this measured move right here and we hold above the EMA, then it looks like a bullish imbalance is forming in this overall range right here. And so let me just remove this really quick. So if a bullish imbalance starts forming, then yeah, that means it's great to go long. So if you get a reversal pattern higher, you can look to enter long on it. But in this case here, after we push up, we just push right back below the EMA. We get this higher low, but that's, it's just a higher low that forms after already pushing back below the EMA, so it's not good. We little tick higher here, pushes into a failure, and now we're getting another reaction at these lows here. It ends up pushing on through, but we fade right back in. We get another leg up. We're very clearly in this range right here, and we break on down again. Now here, as we push up, we form a reversal pattern. This is in the exact same area as the failed second entry on the ES. Now, it doesn't set up as good on here, and just because you take a trade on one chart doesn't mean you want to take it on the other. Just if you have a good setup on one chart, take it on there. If you don't have it on the other chart, then don't take it on there. That's my view. So I'm going to compare this to the ES really quick. On the ES, we push above the EMA, we get a couple legs back and have a clear push back above the EMA. You can see those two legs down, but then on here, with these bodies, we push up, break, and it already has a new high with those bodies here, and it's, not closing above the EMA. By the time it's closing above the EMA, it's basically pushed up to a new high. To me, it looks like uptrend, break, first leg higher, and then second leg higher already on the entry, compared to the ES one where it's just a two-legged break. It's just two legs back. You see what I'm saying here? Even though it's choppy, you can still learn to read through it and read the actual price action behind the chop. Here, uptrend, break, first leg at a new high, second leg at a new high by the time you're at the good bar closing above. And on the one on the ES, it's just a two-legged break. It's just a little bit choppy. So I hope that's clear there. We continue higher here, and we push up, get another first entry, holds on the EMA. It's just a first entry, so you don't want to take it. Get another reaction to the range high right here. Good place for a reversal pattern, even though this measured move would still be in play. If you push lower from here, that's showing you that this triple top, this range high, is very strong. So you could look for a reversal pattern, failed second entry, holding below the EMA. But as you can see, this measured move was stronger than this level here. So price pushes up to it. As soon as it reaches it, it starts to go sideways here. We get this little push out, fade back in, and then right in here, this is a great place for a reversal pattern, a failed second entry, because we're at the overnight, or excuse me, not the overnight high, we're at the range high right here, and price, as soon as it met that measured move, started, struggling to push higher here, which means it's trying to fade back in. The bears want to fade back into this range right here. And so at this point, we didn't get anything in here because it was just too choppy, nothing set up. But you can see that when we fade here, this is a good place for a reversal pattern. And I'm just going to mention this because I like to mention what's going on, even if there's technically not a trade here. From this high, price formed a failed second entry before continuing lower. From the top here, we have first entry long, second entry long, failure. Also, basically, you can view it as downtrend, two-legged break, and then a push to a new low. Because what you have here is first leg down and then second leg down, and so I didn't want to enter short right here, even though you have these two big picture legs up and it could push lower here. You've already got these two legs down here. So I don't want to take a short right at this level as a big picture entry just because we have these two legs up. To do that, ideally we would have just already, ideally for it to work, the highs would have to be a little bit higher and then get a sharp push in and then enter straight from there. The highs were a bit too low here and it pushed out too far, and so we're already getting a first clear leg down and then getting a break before it's even faded. And so by the time it fades, you already have the two-legged move down. So at this point, I would want to see a failed second entry. It is around this, these two swings are around the same area. And so if you get a failed second entry from here and it pushes on through that measured move, then you can still look to go short and continue with the fade. Because if it ignores this measured move, because this is basically your two attempts to fade and it's successful. So if it ignores this measured move, then that's really showing you that you're getting a fade. You're not getting a retest and then push off. You're getting a real fade, pushing through the measured move, and then a couple legs back, retesting the high again for a failed second entry to continue down. And so, as you can see, let me just redraw this here. So basically, I would like to see a failed second entry, from this leg down here. And yeah, that's why I have it circled right here. It just doesn't happen. So anyway, we continue on lower here. We get this leg down, downtrend, break, new low. As soon as it makes that new low, we have two legs up, reversing higher. And so, let me just draw this here. So anyway, again, with these two pierces, you can look to lower the lows here. So anyway, good place for a failed second entry. We could get a push up, a couple legs back, retesting the overnight low. These things never copy straight. So I think I accidentally called this the overnight low just now, the range low. So this is what I'd be expecting, looking for. Failed second entry, holding off this low right here. Yeah, great context for it. Clear fade. Price, just shot back in right there. So if we get an opportunity for a long, then we would absolutely want to take it. Even though price didn't reach the overnight low, it doesn't matter. Price couldn't reach the overnight high either. It's just, chopping around in this range. You got to play the range while it's still active. So anyway, that's going to do it for this video. I really hope it helped out, and thanks for watching. I'll see y'all next time.